Okay, next up, I'd like to introduce Stewart, CEO of QC Copper and Gold. QC Copper is focused on advancing the past-producing Opemiska copper mine complex in the Chapais-Chibougamau region of Quebec. The company sees ample room to grow this mineral resource with further exploration and definition drilling.
Hi, good afternoon, everyone. My name is Stewart. Thank you very much, Lisa, and thank you for having me here today. I'm very excited to be here in Quebec. It's my first time at this particular conference, but obviously I'm here representing QC Copper. QC, of course, stands for Quebec, so it's very fitting that we're here telling our story. And the story is very simple. It's as we say here on our presentation, it's a legendary mine reborn. It is the story of the Opemiska, which was four high-grade underground mines that produced for nearly 50 years, shut down in 1991. It produced a good deal of all of the copper that came out of Eastern Canada throughout the 20th century, and then it shut down, and it hasn't had any life in that area since. We acquired it about 4 or 5 years ago, and we're going to reinvigorate it and reinterpret it into an open pit, and a very large open pit, right in the heart of Quebec and the heart of Chibougamau. And it's a process, and one that we came out with and defined a 2 billion pound copper and gold resource right in the heart, and it's going to get bigger. And I'm going to run you through it just now. So before I get into the story of QC Copper, I want to take a minute and talk about people and who QC Copper is operated by. And you'll see here, this is our portfolio of companies. Our group is much larger than just QC Copper. Our group is called the OR Group. And it's a portfolio of companies that are based out of Toronto, but across Canada. And we have historically focused on putting a commodity within a specific company, just like QC Copper focuses on copper. Our company Baseload, and my colleague James Sykes is here either today or tomorrow making a presentation about uranium, and that's what Baseload has been up to. And I'll point out Baseload in particular because QC Copper owns quite a bit of it and has monetized a fair amount. In fact, $8 million we sold in Baseload last year, and we put it back into the ground. But it all goes down into people. And if you're going to make an investment in this industry, and this is a very risky industry, you need to focus on who you're entrusting your capital to and how they allocate it. And I will say that our group, while I'm biased, I will say that our group is amongst the best in terms of how we operate, how serious we are. We put our own money into these projects, and we treat our investors' money like it's our own. And from that has been born, as I said, Baseload Energy, Metal Energy, Mustango River Resources, American Eagle, ORCAP, and of course QC Copper. We've attracted investments from groups such as Kirkland Lake Gold, Agnico Eagle, Teck Resources, Osisko, and others. So I think that's important. I just want to tout our team and the fact that QC Copper is a part of a larger group. But specifically, let's get back to QC Copper because we're here in Quebec, and I think there's a number of milestones that are on the horizon for QC Copper. But before I tell you about that, let's look about the jurisdiction that we're in. We're in Chibougamau, which is just a 4 or 5 hour drive north of here. As I noted before, this is where all the copper was produced in Eastern Canada. You can see we've got a big portion of that district of Chibougamau covered in our Opemiska project there, and you can see those 4 mines. What I will point out, aside from the large copper gold resource, again, which is 104 million tons at 0.85% copper equivalent, pit constrained, we benefit from all of the infrastructure that was developed by Falconbridge. We've got a rail that runs west to the Horn smelter in Rwanda. All the concentrate was processed throughout the 20th century and is going to get processed again, we believe, in the 21st century. Alternatively, there's the rail that runs to the Tidewater, Baie-Comeau. We've got an airport. We've got local communities who provide our labor force, our drillers, our explorationists, line cutters, caterers, etc., all next door. And of course, in Quebec, we benefit from the most cost-effective and green hydroelectric power that we have a high tension power lines running right through our property. So all of the infrastructure is there. We believe the geology is there. And what is the geology? I'm going to show you here. This is what the geology looks like. What you're looking at here is our resource that we published at the end of 2021. And this is based off about 30,000 meters of drilling that we did as a company of QC Copper and 800,000 meters of drilling, historic drilling that was done by Falconbridge. And we took all of that data, which was a huge database, put it all together. And what you see there in gold is what the mineralization looks like. And what you see in the pit constraint model is, again, that's the 2021 resource estimate, which is 2 billion pounds of copper. It's a lot of copper. What you can also see is that outside of that pit, there's an awful lot of gold, an awful lot of mineralization that has not yet been captured. And without getting into the specifics of it, there's huge upside outside of that pit, but also within that pit. So since that resource came out, we've done we had raised about $15 million and we put about 12 of that into the ground. We drilled 60,000 meters and done a whole lot of other work that isn't necessarily as sexy as drilling, but it's incredibly important, specifically when we talk about the quality of the resource that we're going to be pushing out. We expect the quantity, meaning the grade, the tons, the strip ratio to be improved and enhanced in this updated mineral resource estimate, which is forthcoming. But I emphasize the quality of this resource, which was all done in-house. Our previous resource was done by a third party, which is 99% of the resources out there. But this time we realized that this is going to become a mine, and we had to take extra care. And we brought everybody in-house who works for us, and we developed this resource on a proprietary basis. And we totally really just tore it down, its interpretation, with the idea to deliver a totally defensible and reliable model that when somebody does to come and take a look at this asset, whether it is to make a 9.9 or a 19.9 or in time buy us out completely, they have complete confidence in the integrity of our database and how we've interpreted this geology. We believe this is real in terms of all of the assets we have across Canada within the ore group, which is vast. Statistically speaking, we believe this is without question the highest likelihood of becoming a mine. So we're taking great care with how we're doing it. We're putting this 43-101 out in the not too distant future. And we'll also be announcing that we've completed our option and we will own 100% of this net of a royalty that's going back to the vendors. Now, a little bit, this asset is also, we like to point to those who have done it in the past. This is, as we say, a legendary mine reborn. This is a story that's analogous to the likes of Malartic, which of course built Osisko and now is operated by Agnico Eagle. Same story with Detour, which again was bought by Kirkland Lake and is now an Agnico. Those two stories, which are Canada's first and second largest gold mines in operations, are again very analogous to the story of the Opemiska, which were that they used to be high-grade underground mines that ran to the end of their life in terms of these vein systems, but some smart people took a look at them and reinterpreted them as bulk tonnage. So that is what Opemiska is doing. Those are the types of challenges we face. But I think that sort of opportunity, when the stars align and you get a project that can define these wide zones that are near surface, and in the environment of the metals prices that we are now, this is an amazing opportunity to develop an asset of this size and again benefit from the infrastructure of the past. When you're looking at a project for base metals in particular, size is something that always comes up. You cannot have a small copper mine, and again, 2 billion pounds is no small copper mine, but it's not a porphyry. It's not one of these $10 billion capex porphyry things that won't be developed for the next 20 years. This is big enough in the sense that, as you can see here, the Mining Journal says we are the third highest grade undeveloped copper deposit in the Americas, and we are in the top 20s. So we certainly check the box in terms of grade. There's no question about that. But in terms of size, we are big enough. But again, we're not going to be a mega project. And that's exactly where we want to be. We're sort of the Goldilocks of copper projects. We fit in the zone where we think we can be developed in this cycle. There's some awfully sexy copper porphyry projects out there that are very enviable and will be developed, but more of them will not be, and most of them will not be developed anytime soon. While a project development of any size takes time and effort and risk, We think within a 4 to 5 year period, notwithstanding cyclicality in the macro and the metal prices, this is something that can be developed again this cycle. So this is the Goldilocks of copper gold projects. And again, it's in the heart of Quebec. And I'm not just saying this because I am in the heart of Quebec right now. Quebec, there is no better jurisdiction to do mining and exploration than in Quebec. We have such advantage from the local labor force. I'll start with the people. The people there understand mining, and it's part of their culture. The government is behind you with things such as the Plan Nord, and then of course you've got the strategic metals premium, which lowers our cost of capital, which allows us to put more money into the ground to understand the asset and de-risk it better. And then you've got a very streamlined permitting process. So there is no perfect jurisdiction. Every jurisdiction has its risk, but Quebec, in my eyes, is without parallel. In terms of a corporate overview, I'm going to be very candid. The market does not believe us. Everything I'm telling you right now, when I'm putting analogs next to Canada's second and largest gold mines, they don't believe us. We've got a market cap of about $30 million. And that's a reflection of where we're at in the market today. But at the same time, I do think that if and when people do believe that we do have a legendary mine that is going to be reborn in our hands, our market cap, has a 10 times re-rating. There's no question. And then we can move it up the development curve. Part of the challenge, of course, is we've got, just like Malartic did, we've got urban challenges, if you will. Urban's not the right way to say it, but we are dealing with the town of Chapay, which is close to us. And a lot of people want to understand what are the social challenges you will face. And I always say there's absolutely no question where you're going to be impacting this town. I think net on the positive, but you always have to be cautious and careful and communicate twice as much as you think you should with the local stakeholders so they understand the risks and the benefits that we will bring. So with that, I think once we do get past this updated resource, which is coming out shortly, we're going to revert to the PEA. And the PEA is really where I think the world is going to start to realize the value and how rare the QC copper, the Opemiska asset is, because that's when we can start talking about not just the engineering challenges, but the mine planning and how we're going to go and address all of these social issues that every open pit project in Canada and around the world faces. Aside from that, we're not raising money right now. We've got $8 million of cash from the bank. And we've got, again, as I noted before, we've got almost 11 million shares of baseload energy, which is a very exciting uranium exploration project that is starting a $7 million drill program right now. We think uranium is bouncing back, and so we look forward to the time when we can monetize further that investment, which I'll note we made at a cost of $500,000. Is worth more than $12 million in our book, half of which we've monetized. So outside of that, I'll point out we've got a very strong board, but the technical leadership is led by Charles Baudry. Charles is the one that identified this project and has really moved it through the de-risking process. And with that, I'll leave it at there. Again, my name is Stephen Stewart. These are my contacts, my email. I look forward to any calls or questions from the audience. Thank you for your time.